I'm going to start with number 10, Zynga, online game maker, seeing a 75% drop in market value from its IPO last December. Problems retaining top talent as well. In fact, more than 6 senior execs have left the company as compensation dwindles with the falling stock price. On to number 9, Dom.
Well, number 9, Deirdre, is Sprint. Shares of America's third biggest wireless carrier up 150% for the year, getting a large jolt when Japanese giant SoftBank purchased a 70% stake in the company. And M&A has been in the headlines for the company as well. Sprint works towards acquiring the half of Clearwire that it doesn't already own, Matt.
Number 8 is Expedia, the world's largest online travel company, which billionaire David Einhorn added to his hedge fund this year, is set to close out 2012 with a market value twice as high as in January after the company spun off TripAdvisor to focus on its core business.
All right, Matt, number 7, Bank of America, one of the most troubled bank stocks during the financial crisis, logging a huge rally this year. Priced in January at 6 times earnings, the company saw its market value double over the past year. Julie.
At number 6, we've got Yahoo. The online web giant got a new captain this year, of course, when Marissa Mayer took Scott Thompson's job as CEO after he was ousted for inaccuracies on his resume. Remember that? And investors seem to approve of the former Google VP's turnaround plan. They've been driving the shares up nearly 60% since Mayer took the reins in July. Matt?
Number 5 is PulteGroup, the home builder that trades under the ticker PHM, was the biggest gainer in the S&P 500 for the year, with shares up nearly 180%. The boost for the company was spurred by signs the housing market is recovering.
And
Deirdre?
if we look at number 4, Best Buy, one of the biggest losers actually in the S&P 500 this year. It has been struggling against online competitors. Investors are bringing the share price down to about half their price from a year ago. The company's founder, Richard Schultz, trying to take advantage of the low price, so far has been unsuccessful in his attempts to take the company private. Dom.
Well, Deirdre, number 3 is HP. Hewlett-Packard shares of the struggling tech company hit their lowest price in a decade as Meg Whitman, the newly minted CEO, fails to impress investors with her turnaround plan to narrow product lines and focus on its corporate customers. The past also haunting HP as it writes off nearly $9 billion from its acquisition of UK software company Autonomy. Jules.
At number 2, we've got Apple. The iPhone maker earned its spot as the world's largest company with a market valuation of slightly under $500 billion. Apple, of course, has released 2 new iPads and the iPhone 5 this year. The company up 25% year to date, despite shares dropping nearly $200 over the last 4 months. Deirdre.
And Julie, Facebook, the world's largest social network, making its debut on the trading floor May this year. $38 a share within months, though. As you know, shares half that price. Investors worried about the company's growth, the ability to cash in on mobile users, but a page has turned, so it seems there's growing confidence, and the stock, if you look, rallying about 50% from its lows.